There's nothing new under the sun. So your great idea, there's 1,000 other people that had that idea and it's probably already approached a bank or a lender. When you're approaching a private investor, right, that person, they can make decisions off of emotion. The banks have to follow rules, and unfortunately, you have to abide by those same rules.
I think right now is one of the biggest opportunities for young folks or for anybody to go out there and take control of their life by starting their own business. Everybody's got a skill. Everybody's got something that they want to share with the world. At least everybody I've known. But so few people actually go out and create their dream. They get held down by conformity. They get held down by other people telling them their idea is stupid. And also they get held down because someone says, "Well, where's the money going to come from that?" And I know you work on this exact level and you help people get their businesses going or growing with other people's money. Sebastian, tell everybody a little bit about this.
Well, I mean, I'm going to respond to that with a quote from a politician. I'm not going to say who the politician is, but the quote was that most people's dreams die in the parking lot of banks.
Ooh.
And and that's the
Now I'm
truth
going to ask you,
because
you got to tell me who is that president?
oh no. I'm
Is
not
it
gonna do
Trump?
it. Huh? No,
Is
no, it wasn't. It
it
wasn't.
Obama?
It wasn't. No, she never became a president.
Oh, Hillary?
Yep.
Really? Hillary
Yeah,
said
yeah,
that?
she said that.
I,
Yeah.
I don't
I
think
was
any less of that statement. I think it's great. I think it's
oh no, it's an amazing
absolutely
yeah,
true.
I remember when she said it, I got chills. I was like, "Oh, that was good. That was so good," because
Wow. All
that's
right.
the
Say
truth.
that again, though, so the audience can hear that. I thought that was good.
Yeah, most people's dreams die in the parking lot of banks.
So how do you help people have their dreams not die at banks? Because listen, I could go down six rabbit holes on how my dreams, my business ideas, which catapulted me to who I am today, almost never happened. Literally, probably way closer to not happening than I believe, all because of that parking lot of the bank.
Yep, yep. So the problem is most people when they're approaching lending, they rely on the bank, whether they're applying for a mortgage, a car loan, or a business loan. Most people treat it the same way. They approach it where they rely on the bank to tell them the story. They let the bank check their credit and tell them what their credit is. Where you can prepare in advance by verifying your credit, you should know what your credit is, and you should do what you can with some adjustments or maneuvers to optimize your credit in advance. So when you go to the bank, you control the narrative, right? So how do you do that, right?
Yeah,
And
how
so
do you
it's
control the narrative? I mean, I feel like the banks are always in control. The banks take people down. I've seen banks literally just destroy people's businesses
oh
because the
yeah,
bank was just like, well, we have to research this. We have to look at this, and you know what? We're gonna freeze your accounts. I just had that happen with another business friend of mine.
yeah. So first starts with knowing your credit, right? Knowing your own stuff and doing the diligence to optimize your profile, right? And then second, it's understanding and knowing the underwriting criteria for that bank, depending on the type of loan that you're trying to
How did they get
qualify
that
and
underwriting
get approved for.
criteria? You know, let's
So
get in the weeds on some of this stuff instead of just surface level. Because these people listening to this,
sure.
they're gonna want to know, like, all right, how do I get that
So there's
information on what the bank's appetite is?
two ways to do that. One is, school of the hard knocks. You literally contact the bank and ask before you apply.
Pretty simple.
I'm interested in your product, in your loan. I want to know what the guidelines are, what are the criteria, so I can prepare in advance and be ready to get approved. They actually appreciate that because they get a lot of paper that is a waste of their time, and they don't make money on underwriting. They make money on closing loans. So when someone takes the time to package a loan properly, they like that. That's why they like working with a broker like myself because I help to do that. I help to get the client optimized, packaged so that when we present the case, the likelihood, the chance of them getting approved is a lot higher. Right now, I always tell people I can't guarantee you a loan because there could be 1,000 variables that could cause something to fall apart last minute. But the point is to minimize your chances of getting declined simply by preparing in advance. That's
Let's
really
talk
what it
about
boils down to.
preparation. I know a thing or two about this. A lot of people almost most people that get this business idea, they want to start a business. They think it's the greatest idea ever, whatever it is, landscape business, financial business, and they got all the idea. Maybe they've done some research. Maybe they work in that industry. But when they get the idea, they think they're ready to go. But yet they
Yeah.
have no business plan. They have none of the financials put together. They don't have projections. They have nothing. And
Yeah.
then they rush into the bank to say about getting a loan. Hey, I got this idea. Maybe they got a couple things, brochure, because obviously
Right.
with AI, dude, you could whip up a brochure and sales sheets in a couple seconds, but they don't come prepared. And
Right.
to what you just said, it made a lot of sense. I mean, a bank doesn't want to waste time. A
No.
bank's going to literally just get rid of you as quick as they can if you're
Yeah.
wasting their time and you don't have everything you need. And this is, I think, where a lot of people fall flat on their face because they think that because the bank, I don't want to call it rejected them, but the bank kind of didn't give them that positive dopamine hit of, oh, yeah,
Hmm.
this is a great idea. This is a great business. They just gave them a
They give
bunch of
up.
things to do. The person goes back and be like, starts thinking, oh, this isn't such a good idea. Maybe
Right.
this is a dumb
This
idea.
is a sign that I'm
Right.
not supposed to do this
So,
or
how
some.
do you work with people to
Yeah.
get them over that hump so that they don't have that happen to them, where all of a sudden their dream just dies? It literally, like that's a
Yeah.
perfect sum up because that's
Right.
your deal dies, your dream dies the second you get in your car in the parking lot because you didn't get that dopamine hit and that positive feeling about your
Right.
business.
Yeah. So first, let be sober minded about the situation in that 9 times out of 10, there's nothing new under the sun. So your great idea, there's 1,000 other people that had that idea and it's probably already approached a bank or a lender. So a lot of times we get excited because we come up with this, great idea, this scheme that we think is going to make us millions of dollars. And in our minds, we're like, oh, if anyone who hears this, they're going to want to invest. So a lot of people think that, okay, they're approaching the bank as an investor. When you're approaching an investor, a private investor, right? That person, they can react, they can make decisions off of emotion. They can, make a decision on a whim without even looking at your credit, looking at, but banks have to follow guidelines, right? They have to follow rules. The bank has its rules. And depending on the loan, for example, an SBA loan, there's government guidelines that they have to follow. So they can't just say yes because it sounds good and it looks good. They need to verify the numbers. They need to know what are the demographics of your audience, right? Who's your competitor? What is the demand for your product in your market, in your area? How are you going to finance or, you know, just cover the basics of running the business for the first 5 or 6 months? Are you employed? Do you have income? How is this going to work? Not just to get you the money so you can launch this dream, but how is it going to last? How is it going to make it past those first 6 to 12 months, which is where most businesses fail because of, poor planning, right?
What do
So,
banks usually require? Somebody comes in for a business loan, they are prepared, they're working with you, and they've got all their ducks in a row. How much capital does the bank typically want you to have in relation to the amount you're borrowing?
so the that's a great question, but it's hard to answer because there's different funding options, and it kind of
Okay,
depends.
let's take that
Yeah.
equation out. Let's just say
Okay.
SBA loans,
Okay.
because
SBA.
SBA loans are where a lot of
Sure.
first time businesses go because it's
Right.
government backed.
Yeah. So first of all, an SBA loan, if you're a startup, pure independent startup, you have to anticipate that they're probably not going to want to get into a loan with you if you're looking for less than 350,000. I've been doing this for about 20 years, and I can't find any banks that are willing to do pure startup loans less than 350,000. See, the government's the SBA, and they created this program, and they say that the loans could be really low, down to like 50,000, but the bank's the lender. And so one of the guidelines of the
Mhm.
government is the bank is allowed to put in their own underwriting guidelines to the point where they don't even have to participate. So if you're going to like the big three banks, they're not going to even fund a startup. They're just going to say, come back after 2 years, And again, now you thought that that was the bank that was going to fund you. You got a hard no, and then your dream dies in the parking lot and you give up, not knowing that there's a bank right across the street that's a smaller independent or even like a credit union or different types of banks that are SBA banks that will fund you as a startup. You just talk to the wrong bank, right? So, and that could be an industry issue. It could be time and business issue. There's a lot of variables that come into play, but generally speaking, as a startup, I cannot find banks that will do smaller loans less than 350,000. Because for them, 350,000 or 3.5 million is the same amount of work that they have to do. So that's number one, right? So now let's just say you are in that range, 350 to 5 million is the range. Then you have to be ready with good credit, no bankruptcies, especially in the last 7 years. If
Define
you have
good credit. What is good credit to the SBA or to the banks?
yeah, just clean credit, no late payments, no collections, bankruptcies, judgments, especially in the last 2 to 3 years. For the bankruptcy, last 5 to 7 years, they don't want to see anything like that. They want to see healthy credit, um, fairly low utilization, so you're not like maxed out on all your credit cards. You should, the threshold again. The government says the score could be down to like a 650 or 680. But I don't know. I've never seen that. Banks are typically closing loans at least 710, 720 on the credit with clean history, right? And a good mixture of credit. You don't just have like one account, but a car, a mortgage, a couple credit cards. You show that you're a positive borrower. You're a good steward of credit. That speaks to your credibility as an individual and whether or not they can trust you. The loan is still personally guaranteed, right? So they will do a hard inquiry on your credit to approve it. It's just not going to show up on your personal credit. So that's the first criteria, right? The second criteria is going to be, income and cash flow. Cash flow is king. They want to know that you have liquidity, that you can cover your own cost of living personally, and you're not going to need the income from the business to cover your personal income for the first 12 months. Because again, you're
Yeah,
revving up
that's
the
important.
business. You're getting
I,
started.
I think that's a really important metric because I think a lot of times when people start a business, there is going to be no income for the first 6 to 12 months, period. I don't know many businesses that would be instant revenue generating where, wow, look at all this money coming in. They don't work that
Right.
way.
Nope. And if you think it's going to be as good as you think, it's a lot of times it's not, and then you have hurdles. And so if you're employed, I would advise you do not quit your job until you get approved for the loan and let the bank advise you when they're comfortable with you leaving the job. There should be a transition in that 12 months from you being an employed individual to becoming the business owner to becoming a full-time owner operator in the business. Now they don't do passive loans. So in other words, you can't they're not going to do a loan for someone who's an absentee owner for passive income. They do want you to be the owner operator of the business, but in that initial transition, they want to know that you do have income. You can pay for your lifestyle, your standard of living, your bills. You can feed yourself, pay for gas, get to the office and function, and not put more stress on the business to cover your living expenses. So if you don't have a job or an income coming in, you're going to have a substantial amount of saved liquid assets that you can access, whether you're going to liquidate some of your assets, or you already have that savings available.
Yeah, they need a boat full of money.
They need a boat full of money. That's right. Yeah. So that's another thing. So they're also going to be looking, if it's a startup, typically 20 up to 30% down payment, or they call that a liquid equity injection. Okay. And then another 6 to 12 months post-closing liquidity in reserves. You don't have to deposit it in their bank, but you have it there in case you need it. You could get some of that money from friends and family, but it has to be signed that it's a gift, not a loan.
Oh, wow.
You, you could get that money from other debt. Let's say you have a equity in your home and you want to do a HELOC, but you'd have to be able to show that your personal income can service that debt without, again, having to rely on income from the business, which adds stress on the business to service the HELOC if you're using that equity to get liquidity, right? So again, they want to make sure you're in a safe, comfortable place with cash flow and liquidity. If it's going to be an acquisition, and I always recommend to people I talk to who have these great ideas to start their new startup, why don't you look to see if someone has already done that
So much easier to acquire.
and you can just acquire that existing business and if it's for sale, because now it's more turnkey. And so the down payment requirement is going to probably be reduced to 10% instead of 20 to 30%, right? They're much more friendly with that. They
Wow.
feel
So
much
it
more comfortable
reduces
with that.
that much, huh?
Yeah, dramatically. Yeah. Same thing with franchises. If it's a franchise that is a certified SBA, it's on their list, and they have enough franchise locations that has a proven track record, then yeah, they'll do 10% down for business acquisition, 10% down for franchises. Independent startups, you're looking at 20 to 30% down. And
That's a big
they
difference.
they may or may not require equity collateral for the loan. Many
Well,
times they will require um, life insurance collateral. That's actually
yeah, banks love life insurance. I know we're going to get into
yeah,
that in a little bit, but they love permanent life insurance.
yeah. Who doesn't? I think it's the
Well,
best,
you'd be
safest.
surprised. You'd be surprised with the haters I get on my stuff I put out there. I could go
Right.
on right now and show you 10 people that think that we're freaking idiots for putting
Yeah.
money in specially designed whole life. But anyway,
Right.
that we'll cover that in a little bit. I want to unpack this because you said something that I guess I never really thought about. I understood, but you said some things that really kind of hit a nerve, and that is about acquiring an existing business. So you're right. There's really very few new ideas, but what there is a lot of, especially right now, are business owners that have been operating their business to their own, success levels, whatever that might be. But
Mhm.
they never got out of the way. They never got out of the business to work on the business. So they always were just. I don't want to call it a slave to their own creation, but they work in the business. You see this a lot in
Yeah.
restaurants. You
Yeah.
see this a lot in mom and pop retail shops, convenience stores. They're the family's in the business working, not working on it, but working in the business. And a lot of times, like an outside operator who maybe works for the company or wants to acquire, they can come in and provide a completely different perspective on that business and
Yeah.
a growth plan for that business that's literally been there. That's a
Mhm.
super easy sell to, I would think, well, I shouldn't say it, that is. I would say that seems like that would be a super easy sell to show a revenue forecast into the future that is
Yeah.
significantly increased on an operating business because you can show the revenue already for however many
Yeah.
years, the P&L and all that, but then you can project it out and say, here's how I'm going to grow it, X, Y, Z. And the only
Yeah.
thing you don't want to do is you don't want the existing owner to see that plan. So why don't more people do this? Because literally this isn't a known thing that people do. They always
But,
want to go out and start their own idea because
uh,
they're like, oh, I got to start it from scratch. It's my idea. It's not your idea.
yeah. Yeah. I just think people are they're kind of living in an illusion as far as what's owed to them. It's kind of like the mind state of, they owe it to me. You know, I have great credit, I can get whatever I want. Not true. Just because you have great credit doesn't mean you can get everything you want. Or I have all this liquidity, but I don't have good credit. So I can get everything I want because I have so many assets. Again, not true. Just because you have so many assets doesn't disqualify the need for good credit, right? So it's just kind of, I think it's that
Balancing
mindset
that.
of just whatever their strength is, they think that that's all that it's going to take, and so they feel like it's kind of owed to them. They're going to get whatever they want, and they think they can kind of make up the rules as they go, and that's not how it works. The banks have to follow rules, and unfortunately, you have to abide by those same rules. But I want to speak to what you were talking about, because if you are looking at an acquisition like that, then that's one of the criteria is going to be the business's debt service coverage ratio, right? So they're going to look at that business that's selling, what's their last 2 to 3 years business tax returns and the year-to-date profit and loss statement, and just on how they're performing, is it performing in a debt service coverage ratio that makes the bank feel comfortable that it's a well-performing business, because they're not financing sinking ships, right? So they wouldn't finance like a hostile takeover of a business that's maybe not doing well and you're just going to buy it, recover it. No, it has to actually show strength year over year, profitable business. And the debt service coverage ratio is 1.15%, but most banks want to see it at 1.25%. Um,
Define that. So that's just a number to a lot of people listening. Like
yeah,
explain how do we bring that down to just like a fifth grade level, like that coverage
yeah.
ratio? Explain that.
It's basically your ability. I'm looking at my notes here. So it's your ability to repay the debt. Let's see how I can clarify or simplify that. So they're looking at yeah, they're basically looking at the business's financials as far as the expenses and the income and the ratio after expenses versus the cash flow and income, and
So
what
for
that ratio
every
is.
so what was the ratio you said the bank's always looking for?
So the government says 1.15, but banks typically look at 1.25.
So 125. So is that saying, so I just want to make sure I am understanding this. If a business shows a revenue of 10,000 a month, basically, they want to make sure that there's 12,500 a month coming in. Or wait, I'm trying to think how to do this ratio.
Here,
Ratio.
let me
I
read
was
this
never good at
definition.
ratios in school, but like, let's just say you got a business that's netting 10,000 a month and you want to borrow a million, I don't know what, I'm just doing simple math, 500,000 you want to borrow for this business. Like how would they look at that?
Here, I'll read this. This will help us out.
Okay.
So it's a financial metric showing a company or property's ability to cover its debt obligations, principal and interest, with its net operating income (NOI) calculated as net operating income divided by total debt service. So it's the net operating income
Yep.
divided
So
by
the
the
net
total
income.
debt service, right? And that ratio has to be above 1.0.
Okay.
Um, so that's what it is. I was wrong. I misstated that. So it's the
No, that's all
NOI.
right. I was wrong too. I was just trying to do it in my head and see if there was a
Yeah.
simple way, but I think that's the way to say it. Or just get someone like you to actually run the calculations. That would
So
be another way to do it.
that's one of those things where I have a calculator for it. I'm a calculator guy. Thank God for calculators. I love what I do in numbers, but some people can run them in their head.
Oh,
I
I
use a
get it, man.
calculator.
That's why we created the Vault software for, the
Thank
operating
God,
system
man.
for IBC because it's just too much math to do in your
It's
head.
just
It's
too
too
much, man.
complex.
It's too much for most people. Yeah. So that's awesome that you did that, by the way.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up.
So let me do some rapid fire questions for you. So you're the approved guy, which
Yes, sir.
it's a flashy name, it's a cool name, but like how do you work with people or how do people engage you to help them get approved for their loan?
Sure, sure. So I define myself as a consultant, coach, and a broker. I'm a consultant first. I offer a free 15 to 20-minute consultation just to understand your circumstances, just to get clarity on who you are, what you're trying to accomplish, and see if we're a good fit. And in that, I'm also going to determine if I think I can really help you. From there, we move directly into either brokering, which is consultant coach broker, which means I'm going to connect you to the bank if you can qualify based on our conversation. Now, of course, in between that, I'm going to collect the documents and do a credit assessment and evaluation to
This is
verify,
the
make sure
stage I'm
everything.
at with you right now, right? This is what we're
Yes,
doing? Okay.
correct, right. So it's kind of like just a document verification, making sure we have everything they're going to require, making sure the credit is optimized. There's nothing I can recommend that maybe you should do to strengthen the personal.
So you can
And
actually help people fix their credit.
so there's a difference between, I would say, optimizing the credit and fixing credit.
Okay.
Fixing credit would be if you have late payments, charge-offs, collections, derogatory issues. That requires credit disputes to the credit bureaus, which can be a 5 to 6 month process. It could be faster, but there's no guarantee there.
Ain't
That's
nobody got time for that.
Yeah, that's a full-time job to dispute credit. And again, you can go through credit repair and within a month or 2 months see results, but it could be up to 5 or 6 months, and it's not a guarantee, right? So I don't do repair work, but I have a repair expert that I refer my clients to. So if we do
Makes
need to
sense.
go through some repair, we can get that resolved. But if you don't need repair, but you're just not optimized, again, maybe you have high credit utilization on your credit cards, then I'll advise you, okay, pay down this card here, pay down that card there, right? Or maybe, some of your information is not matching correctly on the credit report. Little details make a big difference. And sometimes the three bureaus are not matching either. They don't communicate with each other.
Is
So,
that part of your coaching? So, because we talked about like you have the first consult, which there's no
yeah,
cost for, and then you can go
correct.
direct to the brokerage relationship, which I'd have to think on the brokerage, you're getting paid on the loan when it funds, correct?
Correct. I
Okay.
have a small coaching fee in between that, which is just $250,
Oh,
and
that's
that's just to
nothing.
cover my time to assess, analyze, and because I can't promise or guarantee a loan, but I am going to spend quite a bit of time putting it together. So that covers that. And so ultimately, yes, there's always going to be a little bit of coaching, even if you're pretty much golden in your profile. There's still some coaching to get ready to qualify. But then
Well,
of course
regardless, you're spending time to get somebody ready, to
100%.
get them prepared for this. I mean, time is
Exactly.
money.
Yeah, I mean, there's brokers that charge $5,000, $10,000, and so I just don't believe in that because I am getting a commission from the banks that I work with, and so that's my way of doing things. I'm not going to double up on that commission that at that level, and so ultimately that's it. I can a consultation. We see if we're a good fit, and then we assess, evaluate, collect everything we need, present you to the bank. Now, the good thing is the relationships I have with the banks, we don't have to go directly into underwriting
Mm.
because if you go directly into a bank, they're not going to just review and assess. You have to apply. And now you're in a 2 to 3 week process with a hard inquiry on your credit, and you might get declined because of something that bank didn't like.
Yeah, I think we've all done that.
Right. Now, unfortunately, now you have an inquiry on your credit, so that brings you down a notch on your credit. And again, now what are you going to do? Which bank are you going to go to? So I work with about 20, just in the SBA. I have about 20 different SBA banks that I have relationships with. So I know which one is a better fit based on the circumstances, and I'll present the case with my liaison at that bank. We'll review it together, and they'll let me know, hey, this looks good. We like this, or we don't like this because of this, that, and the other. And I'm like, perfect. I take that information to the next bank and say, hey, this is my concern. Is that an issue? Bank A said no. Bank B says, no, not a problem for us. Let's do it. And boom, I introduce you to the bank. Now you're in underwriting. Again, it's still not a guarantee, but your chances of approval that you're going to get through underwriting is a lot higher. The underwriting process can take up to 2 months for an SBA 7A loan to get through and finally get funded. But hey, I just got noticed this today. A loan I've been working on for 3 months, and only because of the delay, because of the government shutdown, the SBA couldn't issue loans. Um, you know, just got a scheduled closing date. So got a loan closed today. Thank God.
How many total loans have you gotten closed in your career?
Oh wow, you know what? I don't think I've actually sat down and calculated it because I'm not just doing SBA. Um, I started doing SBA loans about 5 years ago, so I'd say maybe about, I don't know, 200 to 300.
Wow. Yeah. So
Yeah,
you've
over.
dealt with banks 200 to 300 times, and you're still got a smile on your face. Wow, that's a good thing.
It's because of the relationships, right?
Yeah,
It's all
right.
about the relationships. So I make it easy
Well,
for
the
them.
banks really need you because they don't want to waste time, and people walking in the
Yeah,
door on banks is a rarity, and it's a declining thing. So working with brokers like you that know what the bank expects, of course that makes sense for the bank.
yeah.
So they better
And I do
treat you
two
well.
things that the bank likes. I help them to package it, and then I get out of the way. They love those two things, right? Some brokers, they don't want to get out of the way. They want to kind of stay in the middle, and it actually makes it more difficult because now they have to communicate through the broker, right? And no banker or underwriter wants to have to deal with that. That's very frustrating. And then some brokers don't want to really package; they just want to introduce. And then really the banks still doing all the heavy lifting. I mean, they're going to do the heavy lifting anyways, but again, when I present them a case, I provide them enough information that they see that this is a client, a prospect that they want to work with. Um, I do want to say two more things about the criteria. Projections, huge deal. You touched on that. Being able to create projections for the next 2 to 3 years and a business plan is is a huge deal because that's going to map out your future, right?
Isn't it mandatory? Don't you have to
For
have
the for the
a
SBA
business
banks,
plan?
yes.
Yeah,
Yeah.
that's what I thought. I
Yeah.
mean, back in what was that year? 1993. I went for my first SBA loan, and I had to work with the Small Business Development Center at my local community college to build the business plan. But back then, it's almost like cheating nowadays because back then you literally had to go and do the research. I had to do marketing research. I had to do
Yeah.
analysis research on other businesses like mine, which there wasn't many because it was a skate snowboard shop in the 90s. And there wasn't
Yeah.
just tons of them, and had to build the whole business plan from scratch. Today, I got to believe you could just tell AI, prompt it that to be the best business consultant in the world, and it can write your
Yeah,
business
it
plan. But
helps. It helps. But you still have to know your stuff and verify what AI says, right? You still need to double check and make sure that, what that output matches what your vision is. And if anything, it's going to help you. I'm sure you would agree. and I believe having a business plan is like a crystal ball for your business,
It's
because
it's essential. You got to have it. I wouldn't
yeah,
even look at somebody's business unless they had a business plan, and I would know very quickly if AI did your business plan, because AI loves to hallucinate on numbers, and it's not hard to see where AI goes off the charts. I've used it in my different businesses. We're in the middle of an acquisition. I've used it for some of that, and holy crap,
yeah,
was it way off. But it's just you got to know your numbers. You got to know the business you're buying and the business you're looking to start. And if you don't rely on AI to have the right numbers. AI is great at some things and
yeah.
awful at other things.
It
And
can
I would
help you
say,
out, but it's not going to do everything for you.
yeah,
So on that note, as far as projections are concerned, to verify your numbers, you have to be able to map out your assumptions. That's what they call it. It's what were the assumptions you used to get to those numbers. The numbers by themselves mean absolutely nothing without assumptions. Basically, clarifying and verifying what was the logic that you used to get to those numbers, right? Otherwise, they're just numbers. They're just floating in the air,
right.
and they mean nothing to anybody except you just. Where did you come up with that? You
Yeah,
just
you got to be able to break
pull
it
that out of the
down.
air.
Like,
Yeah,
I've got
you have
X
to be
amount
able.
of clients already, and each client's going to be worth this much, and this is how the fall off rate's going to be for the client. You got to be
Yeah.
able to break that
Yeah,
down.
you have to know what's your cost for insurance, what's your cost for light bill, what's your cost for phone, employees, all the variables that are going to come into that business expense, marketing, what is your projections per client, how many clients, how's this thing going to actually function and be successful, not just rolling the dice and hoping that it works. And again, a lot of people don't like that. They don't want to do the business plan, but after doing the business plan, they're usually very grateful that they went through that activity, because it does give you somewhat of a crystal
Oh
ball
my God, you get
where you
clarity.
can predict. Yeah, and it also lets you see, okay, if things go in this direction, I just need to adjust this here, redo the business plan, and then get back on track. If you don't have a business plan, you have no metrics to measure, if things are going as planned or in what direction it's heading. You're just flying by the seat of your pants, and maybe you're successful, maybe you're not. So there's a lot of funding options that don't require business plans, and I don't force clients to do them, but I strongly advise and recommend. And I even have I found a company. It's an AI business plan software that is really affordable. That makes it really easy, so you don't have to go spend thousands of dollars on a business plan.
Wow, that's great. Now, if people want to work with you, they got a business idea, an acquisition, or a franchise that they're looking to do. Yeah, we're going to put your information up in the
Yeah.
description. So, is there anything you want to say about like how they get a hold of you just before we move on to the next part?
Yeah, no, you could check me out on social media for sure, but you can I prefer if you use the link that we provide, because that way I can say thank you to you, to Chris, for helping me to reach
Mhm.
your audience. And so but yeah, I'm pretty public and available, and my information is available everywhere. So my website's theapprovedguy.com, and you can reach me there and just schedule a free consult, or send me an email at Seb@theapprovedguy.
What is it? Give me that email again.
Seb, SEB,
Yep.
at theapprovedguy.com.
All right, I'm writing it down, and I'm sure a bunch of people listening are writing it down. Okay, perfect. So we got the email. We'll put the link up in the description there, folks. Check them out on social media. But I want to move on to the next topic now that we're moving past the borrowing and brokerage, and I want to talk about what I know to be a really bad investment, and that is boats. But I don't want to talk about the bad investment boats. I want to talk about your strategy, which is obviously something that's very close to me, but you call it boats. Do you want to describe that? And just so you all know, banks love this boat.
Awesome, thank you. So yeah, the boat that I'm talking about is your business opportunities, assets, and taxes strategy. And it actually came up as a part of a program that I created, which I called my Merchant Cash Advance, or MCA, rescue program. And trying to help folks that made a bad decision of getting applying and getting funded for their business with a merchant cash advance, and then getting stacked with two or three or four of them. It's choking out their business. So I have a program to rescue them with a lifeline. That's step one. The idea is you're the captain of your ship, and your ship sinking. So you need a lifeline. And so step one is the lifeline, and that could be a debt restructure with an attorney firm, or it could be a loan to consolidate those cash advances if we can get you approved. Step two is to rebuild your profile, your personal and your business credit, so you can get approved from the SBA or a much better loan from a bank. But step three is your BOAT, is your business opportunities, assets, and taxes system, which is a properly designed and structured whole life insurance policy with a dividend paying mutual company. And so that the BOAT ultimately can put you in the position where you no longer have to rely on the banks exclusively. And in due time, you can become your own banker and you can start financing your business using your own BOAT.
Yeah, and I know we both do the same thing because we've done some joint work together with some clients. Now, what I got to know, and the audience needs to hear this because I say it all the time, but I'm just one person standing on an island screaming, but banks, traditional banks love whole life insurance. And it's funny, I just had a bank, I can't remember if it was on the podcast or the webinar, and I asked them, I said, do you guys like IULs? And the answer was absolutely not. They literally won't even provide like collateralized lending on IULs, but whole life every day of the week they'll do it. So
Sure.
what gives? Why do banks love this product so much?
Well,
And they
it's a
use it
safe,
too.
sure, bank-owned life insurance, right? So it's a safe, secure place to protect your liquid assets and watch it grow tax-free with protection. And at the same time, you're able to leverage it and put it to work, pay off debt, recapture the expenses, use it as a down payment, use it to finance your business, or use it as collateral for a bigger loan. So that's actually how I got into life insurance about 5 or 6 years ago, Chris. I had an SBA loan that required a life insurance policy as collateral.
Yeah, they'll
And
do that, won't they?
yeah, and I said, well, who's going to do that life insurance? And they were like, oh, one of our people. And I was like, well, no, I'm going to go get the license and I'll do that. And then once I got the license, I got introduced to, the infinite banking concept and be your own bank. And, I just started researching. I spent 2 years trying to find the right information, just being taught by everybody selling, IULs, IUL. And, I almost gave up until finally, I found the right information and so now I'm, thank God, helping people with the right tools to protect and grow their wealth.
Yeah, there's a lot of toxicity in the IUL space right now. I mean, with the Kyle Busch and all the other news coming out, I mean, people are starting to become more aware of the risks with these IULs. But like with a whole life, I mean, it's boring. It's super boring. I mean, I know we did properly structure them and design them for high early cash value, but it's still boring. I mean, there's no moving parts really. I mean, the only moving part you have is a dividend. And that
Right.
dividend doesn't move very much
No.
and doesn't move very fast. So those are really good attributes when you're looking for a place to put your money where you can build your wealth, but not lose liquidity and still have access to use that money for all the things you mentioned, paying off,
Yeah.
and those are all things I did. I started my story. I'm not going to get into it here, but I was in debt. Me and my wife were getting into real estate. I had lots of debt because of that, lot of credit card debt. We used the policies to pay off the debt. Then from the debt, we started buying cars because we're like, well, hey, if we did this with our debt, let's buy cars with this way. Instead of financing them through a bank or leasing them, let's do it through our own and we'll pay ourselves back. Then from there, we started buying real estate and using it to fund our renovations mostly because at that time we didn't have as much cash value as we would today. So we used it for renovation. Then we started using it to expire bank loans. Like bank loans, they're usually a 5 or 7 year arm on a commercial. So we had a whole slew of them because we had a lot of real estate at one time come due. So what we did is we went into our policies, borrowed, paid the bank loans off right when they needed to mature and they wanted to jump our rate. And we made the exact same monthly payment back to our policy, which maintained our cash flow. Where if we stayed with the bank was in control and they were going to raise our rate. So we did that. And now today I use it for incubator businesses that I start. It seed funds all the businesses that I create and I start, so that I can hire the right people, put the right marketing dollars to it. But again, the beautiful thing about BOAT and your whole strategy is it is a process. And it
Yes.
does take time. I mean,
Yeah.
you're not going to just jump right in and be like, oh, I got this policy. Now I can go conquer the world. It took me
No.
10 years to do this. But
Yeah.
like the thing is a lot of people, they don't want to spend the time.
Their
And
vision
people,
is short-sighted because they're thinking investment and the return on investment within a year to a 5 or 10 year period versus, you know, I try what I try to do is help people get excited about not necessarily the policy, And but just understand that the policy is this, it's just the foundation. It's just it's the engine that you're going to leverage so that you can build wealth in your investments and what you're doing out. So what are you excited about doing outside of the policy? Now, what if you could have that same dollar doing 2 or 3 things at the same time instead of just that? And if things don't go well as planned in your investment, there's a hedge of protection because everything's collateralized by the death benefit. So you have control. You can pay yourself back over time, recapture that loss, and potentially even gain it back in growth over time in the policy. How is that going to happen if that money's coming right out of your checking or savings account? It's only going in one direction. You're never going to be able to leverage or see it again. It's just gone. And if there's a loss, it's a true loss.
Here's a funny one for you, and you'll get a kick out of it, but no surprise. Dave Ramsey put a video up, and I just did a remade video on it, where he said, wealthy people don't buy whole life. I know a lot of very wealthy people. I know family offices. I know people that are worth hundreds of millions of dollars. And when I ask them what kind of life insurance they have, or we get into that discussion, what do you think they say?
I'm pretty sure they're saying whole life.
Always whole life. I mean, they might have term insurance to cover like some of their commercial debts and things like for real estate, but they always have whole life. And the other day I was talking, and I have an interview after this one podcast with a gentleman who runs family offices, and how that conversation came up is because we were talking about whole life. And I just said, family office, that's wonderful. Like, what do you guys think of whole life? And they're like, we love it. We use the heck out of it because and they use it differently than we would. Okay. The family office, they got lots of money, and money in all sorts of different places. But here's what he said to me. He said what you just said. He says, we use whole life. It provides liquidity for the family. Okay. But it provides protection for the family. So what that allows us to do is whole life becomes a hedge. It becomes a hedge for us to take on a little bit more risk and other risk assets because we know that, everybody dies, and a family office is multi-generational, and they don't just think one person's life. They think a family's generational life. And really that could go on to perpetuity. So like the Rockefellers, the whole life, what it does is it serves as a hedge against losses during an individual's lifetime, because even if they hit it wrong, completely wrong, they go through a recession, a depression, they lose the entire worth of that particular investment. That person dies, that whole life policy hedges and pays that family trust back or that family office back. And now all of a sudden it's like starting over.
It's
replenished. And it was just replenished. It's self-completing. And I never, Sebastian, have thought about it that way until I heard that. I'm like, holy shit, that makes a ton of sense. And then Dave Ramsey comes on and says, the wealthy don't buy whole life insurance. It is factual that Dave Ramsey owns whole life insurance. There's factual proof of that. But anyway, I'm going down a rabbit hole here. And I just love that we share the same sentiments about the infinite banking concepts, about being your own bank. We may call them different things, BYOB is my thing and BOAT is yours. But at the end of the day, it's all the same thing, the same principles and the same solution for the client. And I love that you've got this whole process that goes well beyond just the infinite banking concept. Like, you're helping people along this entire journey. And that is a pretty powerful thing. And it only makes sense that, that journey has to finish. So then now you got this other division where you're doing the specially designed whole lives, the BOAT, and all the different strategies that we both teach. And I love it. And I love that we get to do joint work together.
Oh, man, thank you. I'm honored and I appreciate it, man. And I want to add this to this statement. I like to say is that you could never out earn. I don't know if you agree with me with this. Let's see. You could never out earn how much life insurance you can purchase on a death benefit.
I don't know if that's fact, but I don't
earn the amount of death benefit you could purchase in life insurance.
I don't think you can. I don't know how you could. I mean, it would take a monumental freaking effort or just a stroke of luck. And I don't believe in luck. I believe luck follows opportunity, because you're right. You can't out earn it. So why is it that so many people hate it is a whole mystery to me, but it's really just conditioning and conformity. That's all it is, and Dave Ramsey should have said, what? Broke people buy term. And I agree. And they should. And I don't think broke people should buy whole life. And I'm not, talking wealthy, broke, all this stuff. This is Dave Ramsey's words. He said broke people should never own whole life. And he even said middle-class people should never own whole life, which I even in the video kind of agreed, because like, if you're middle class and you're struggling to pay debts and all these other things, like maybe whole life isn't the best fit, because Dave Ramsey, he's got freaking tunnel vision. He doesn't even know what we do, won't even acknowledge it. He just whole life just is this round square cube and it has to fit in this little box. He doesn't understand the
Well,
engineering
yeah.
around how
If
we build.
90% of your premiums are paying for the death benefit,
Yeah,
then
then as a middle class person in debt, you should
no way.
probably never buy whole
That
life
doesn't
insurance.
make sense. I agree. Yeah.
So I have to agree with him, but I have to disagree because he only goes one level. Like
Yeah.
he doesn't look at the whole picture, and we
Yeah.
do, and that's why. Listen, like one day, one of us is going to get to debate Dave Ramsey, and it's going to be fun.
Yeah, yeah, one day, and and it's not about being right or wrong. It's just about sharing the truth. And it's one thing to have an opinion, without having a different perspective. But when you have that level of a platform and authority, there where so many people are listening to you, and you make these blanket statements, it's just a dangerous platform to have that type of authority where you're kind of you're controlling and not, I wouldn't say manipulating, but you're effectively harming a lot of people in their potential, because you're limiting them to what they could do if they just were able to make up their own minds by having all of the information. And that's just because they trust you. So I mean, I would rather, why not just present it of, hey, look, there's the good, there's the bad, there's different perspectives, versus flat out blanket, this thing is bad, right? Because like even IUL, like there's a place for it, maybe for like a guaranteed death benefit, just
Premium financing,
premium.
IUL
Yeah,
works really well for that.
not for infinite banking, not for becoming your own bank,
No,
not for
not even
borrowing,
close.
no. But if you're trying to get a death benefit at a very low cost, permanent policy, it could be a solution. It could be the answer. But it's just, when it's misrepresented and sold as infinite banking, then right. So there's different angles to it. So that's all it is. But yeah, hopefully one day one of us that are here, teaching the truth, get the opportunity to speak that truth to him,
That'll
and
be the day.
not to prove him wrong, but hopefully to change his mind, which I don't know if that's
I don't know.
possible.
His ego is so big. I
Yeah,
don't know if that's possible, but someday maybe we'll have that opportunity.
yeah.
Listen, Sebastian, this has been great. I really appreciate it. And folks, if you're listening, we're going to have all that information up in the description so you can get a hold of them. There's going to be a link up there to book a call, and then just go check them out, theapprovedguy.com. And Sebastian, hey, man, I look forward to doing more stuff with you, continuing to send people over to you to help them get their businesses started, businesses funded, and all that good stuff. And I'm sure we're going to be doing more joint work together on the infinite banking concept side.
Awesome, brother. I look forward to it, and thank you so much.
Absolutely. All right, folks. Thanks for joining us for Money School Elite. We will see you on the next episode.